For more on this, we're joined by Andy Mok in Beijing. He's a professor at the Beijing Foreign Studies University. Good to have you on the program with us, Andy. Now, how has the world's most indebted property giant Evergrande's liquidation impacted China's broader property sector?
Well, thank you for having me. I don't think that recent developments with Evergrande or some other Chinese real estate companies, including Shimao, Sunac, have much impact on the overall situation. It's important to point out here that the real estate market, China's export machine, and its investments in infrastructure have been the three growth engines that have taken China from a poor, backwards country to the second largest economy in the world. And what we're witnessing here is indeed a crisis, I think, of gigantic proportion. So a little bit of perspective. China's real estate sector accounts for between 25 to 30% of China GDP. Global analysts consider it the most, one of the most, perhaps the most important asset class globally because of the impact it has on demand for global commodities like iron ore, copper, etc. So it is very, very important. What is happening is having a severely negative impact, not just on China's economy, consumer psychology, but global commodity markets as well. But it's important to point out here that none of these developments, including Evergrande's liquidation process, is anything new. That this is a process that has been unfolding, as you say, over the last 5 years.
Right, and why haven't Beijing's stimulus measures been able to stabilize that crisis?
Yes, and I think that's a question that's often asked, especially amongst foreigners observing this, what I would term a fundamental transition. So the Chinese government is taking steps to stabilize the real estate market, but I think we also have to recognize that the government has concluded that this engine of growth, one of these three engines of growth that has delivered historic, unprecedented prosperity to the people of China, no longer serves this purpose. And as we're seeing, this is a profound transition, in some ways a very painful transition, away from an economy where real estate has been an important economic driver, a source of wealth creation, wealth accumulation as a major asset for Chinese families, to one that is driven largely by productivity increases. So I think the core question that one ought to pay attention to here is, how is China, as largely a state-led economy, able to manage this transition? Now, many Western economists are deeply skeptical. But at the same time, if we look at China's track record of defying the Western skeptics over decades, I would not consider this to be an unachievable transition. Certainly, it's a challenging one. And this does have long-term ramifications for the real estate sector in China, in that any expectation to the boom years or the go-go years may not be very realistic. And a stabilization and perhaps a modest improvement may be the most realistic outcome we can look for.
Right, and we will find out what more is to come for China's property sector in the coming days. Professor Andy Mok there from the Beijing Foreign Studies University. Thank you very much for joining us.
Thank you for having me.